What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 26th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to make a pretty bold claim, and that is why I believe genuinely at this point, it is abundantly clear that the Bitcoin bull market narrative that we have been sold on so adamantly from many market participants is a lie. It was built from the beginning on a variety of fractional narratives that the market put together time and time again to try to justify why Bitcoin was moving higher, and the continued stagnation we are seeing in price, not just in Bitcoin, but in altcoins and broader global assets here over the past couple of weeks, especially as we enter into the upcoming FOMC meeting for the Federal Reserve here later today, are nothing more than proof that we are clearly set in to continue either moving sideways or lower here over the next couple of months, not having the legs to really kick off a new bull market. I want to spend some time to dive further into this. We're going to be diving into a whole range of charts. It's going to be a really juicy episode, guys. So if you guys happen to enjoy it, whether you agree or disagree, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. So I want to start here by talking about Bitcoin, guys. And the reason I'm starting here on this weekly time frame is because, as we discussed in our last video, we talked about how Bitcoin, between the kind of upward channel or ascending channel we have here, the core resistance that used to be prior support for Bitcoin, and what we're looking at as a potential accumulation channel long term for Bitcoin, are all signaling a clear sign to me that if we aren't able to hold in this range, if we are not able to break through this prior support range, which is now resistance, the sideways channel here, if we cannot clear through that here within a very short window of time, this is going to continue playing as resistance. And as we continue to push below the support band of this ascending channel and break through that, potentially down to say 28, 27K, this is going to be full proof that the market does not have the juice to move forward, that this level is still a supply zone or resistance zone, not a range for demand or support. And if that is not a range for support, we got to look for a lower price level where we got to catch a bid. And I got to be honest with you guys here, as price has been holding up in this range, and now such a long-term range of prior support is now acting as resistance, I got to tell you guys, this sends signals that the market is going to likely have a much further long drawn-out bear market than many people think. So many people are convinced already, as we've been trying to call against here, that we're just in a bull market. It's guaranteed. The Bitcoin bank run, de-dollarization with BRICS, and now BlackRock with the new Bitcoin ETF. All these things are just guaranteed to drive Bitcoin higher. We've been hearing that for months now, and still, every single time since back here in April, we have come up into this channel, and we slowly fade to the downside. Someone is unloading huge positions at this range. We don't know who they are. We don't know if it's one entity or many. It's probably many participants in the market. But generally speaking, price action doesn't lie here. And we're getting towards a critical point where one of our weekly momentum indicators will flip soon if Bitcoin continues to stagnate here over the next week or so, giving us our ample shorting opportunity for the first time, really getting that red flip on the weekly time frame in a substantial way. But it's not just me bashing here on Bitcoin's price action. It's the lackluster performance here against the NASDAQ here. This is an important point I want to talk to you guys about here, because a lot of people just turn towards Bitcoin and crypto as it has been the leading performing asset over the last couple of years. And it makes sense. Bitcoin's cap supply, Bitcoin's a new asset. Therefore, you're likely going to have the kind of fundamental factors that can lead to high growth. However, it doesn't mean that just because those things that gave Bitcoin the benefit of the doubt on being a leading asset over the last decade are going to continue holding true in a generally risk-off environment, or even in an optimistic environment. There's still no guarantee that Bitcoin's just going to continue to be the best performing asset, because Bitcoin now is $1 trillion plus asset when it comes to its market cap. Or generally speaking, if you're talking about the whole swarm of crypto as a whole, you're talking about easily over $1 trillion, right? So again, we've got a sizable asset class here, and a lot of market makers, a lot of institutional liquidity leaving the space, not to mention, even if you want to ignore all those fundamental flaws that are going on in the crypto space, the banks that used to support the crypto space now being a part of the banks that collapsed back a couple months ago, killing those fiat on-ramps. If you want to ignore all that, that's fine, but take a look here at Bitcoin versus the NASDAQ. We're essentially where we were back in June of 2022. Bitcoin has not made any sizable moves against the NASDAQ. Now, some people would say, but Nick, wow, but if you bought here in November, it's up a good percentage. Yeah, that's true. If you take it there from the absolute lows, which I'm sure everyone was just looking to buy in November, as many people constantly say, oh, you could have bought here in November and this and that, right? Yeah, you'd be up 50% on it. I can give you many periods of time here where during periods where it wasn't the beginning of a new bull market, where Bitcoin made sizable returns against the NASDAQ. I can give you, for example, a much more powerful relief rally from back here in December 2018, here towards July of 2019, where Bitcoin made a 276% move against the NASDAQ. That's the kind of activity where I would have been feeling some itch and FOMO. And I remember when that was happening back in 2018. What we're seeing now is a minuscule move, even if you consider diminishing returns. Even if you took the absolute high range here in the lows, 83% versus 276%, not that optimistic in the grand scheme of things. Bitcoin has done this before, and not to mention if we're using this as a model here, well, we saw exactly what happened afterwards. Even before the pandemic, Bitcoin gave up nearly 60% of its gains against the NASDAQ. Now, why am I talking about this here? Why am I so adamant about comparing Bitcoin to the NASDAQ? It means here that we need to accept two things. One, that Bitcoin may not be the leading asset. So if you are allocating your capital, if you are optimistic, perhaps have a bit of diversification. Don't put all your eggs in one basket. I'm not saying this to be a monolith of opinion, guys. I'm just trying to share this as a thought experiment for you to keep in mind as you're doing your own due diligence, you're making your own decisions. I'm not telling you to go out and buy, X, Y, or Z asset, right? I'm not telling you to buy anything particular. What I want you to consider here is that Bitcoin or your favorite altcoins may not be the leading assets that liquidity is flowing into. In fact, it may be that liquidity can't flow into a lot of these assets. The institutional liquidity that so many of your people are hoping is going to come into the space, with stablecoin on-ramps in the US practically frozen and starting to deleverage or decline over time, as we'll talk about later. That's a huge barrier. But also, it just might not be where investor sentiment is, right? We've been seeing that AI has been the huge narrative here. And it is not just in Bitcoin's price performance. It is across the board. Take ETH, right? ETH probably has the strongest, more defensive play narrative when it comes to the altcoin space. And still, each and every time, while Ethereum has been having higher lows here, I'll give it that. And the momentum indicator had a good period of time here on the weekly where it was blue. We are getting multiple red flips here. And we continuously face resistance at this range of 2,000, a huge even level here, which, mind you, if we go back, was the kind of rock bottom support here that led us back up towards $4,800 per ETH. So now that range, that same range of the past, which was kind of serving as initial resistance, then support that led for the further higher move higher, this has now been resistance in May of 2022, in August of 2022, in April of 2023, and May of 2023, and also in July. We cannot get a bit higher. Why isn't the market order flow coming in if we are ready for a new bull market? This is the opportune moment to break out higher. And if this ascending triangle, right, a generally bullish pattern, mind you, if this doesn't break out to the upside, then when? What does that signal about the market sentiment? That's my point here, guys. Right? It's great that the market's made a move here from June. Hey, man, if you caught that, that's great. Man, don't get caught in the idea that it's a slam dunk guarantee that it's going to do another 5 or 10x from this point. That's the mindset that people are getting trapped into. They're getting greedy. They're not thinking about the fact that it's made some substantial moves off those June lows. But the question is whether or not they can continue to do that. And those gains that people have made during that period of time, if they were so lucky to buy back then, can easily be faded here, right? We are not getting a bid to push past this range. This is clearly a supply or resistance zone, right? Take a look at XRP here as well. This jumped back up towards the third largest cryptocurrency behind Ethereum. And again, we had the build up here, could have been follow through. Unfortunately, continued distribution, typical of XRP. I know some of you guys like XRP out there. At the end of the day, guys, this is not optimistic price action. We're very close to getting a red flip here on the daily. And that's not what you want to see, some huge 72% move and then no follow through afterwards. It's more buy the hype, sell the news, right? Well, in this case, essentially the hype had already been priced in and now it's time to sell the news. So if you missed that move, if you weren't positioned in there early, well, yeah, I mean, it's a question of whether or not there's going to be more follow through. I'm not seeing that in the sense of price action. And I'm not saying it's totally terrible price action. It didn't completely flip down, but it looks like it's heading there. Take a look here at BNB, right? Again, fourth largest cryptocurrency here by market cap, still just hanging right around where the 200-week moving average is. I don't have it up here in the chart, but you guys can pull it up yourself. Just barely hanging by a thread by the 200-week moving average, and just hanging right above the support level that has been holding since February of 2021. If that level is broken, if the trend line between the two significant higher lows here from back in September 2017 and March of 2020, very critical lows for BNB. If that line of theoretical support does not hold, if the line of sideways support does not hold, and if we don't get support off of the prior resistant highs from June 2019 and January 2018, right? Where is BNB heading? Well, take a look at the chart here. We enter into no man's land until easily down here around 45 to 40 bucks. From a technical analysis perspective, there is no key price level that we can look at for potential like theoretical support. Maybe it'll get a bid somewhere in between there. I'm not saying it has to go all the way down there, but there's just no significant levels that we can look out for. And as you can see, that is going to be a terrible correction. If it's anywhere in this range, something from easily around that range at potentially 29% to the downside, down towards anywhere around 70% to around 80%. From where we are at now. Yikes. But it's not just BNB, it's not just XRP, it's not just ETH. You can go through the list here. Cardano's monthly candle still has not been able to get a blue flip here. We faded the vast majority of the gains, and it looks like we are ready to roll freshly over into our next price target, anywhere from around 14 to 10 cents per ADA token or ADA token. Right? And people always give me crap for mispronouncing it. At the end of the day, guys, I'm here to analyze price, right? I don't care at the end of the day about the fundamentals here so much. If there was exciting fundamentals, I would get really genuinely excited. But I gotta be honest with you guys, all DeFi ecosystems are bleeding right now. It's not an attack on Cardano. It's not an attack on XRP or Arbitrum or Optimism. It doesn't matter if you like these networks, guys. At the end of the day, you want to look at the fundamentals. Fundamentals are terrible right now. They're bad. Name one cool application you've seen. Like, that's what I keep asking people. And I'm not saying that you guys are in this opinion. I'm sorry. I'm just trying to kind of speak on a one-to-one level here that, like, some people are really exposed in the market right now. And they're really thinking as if it's 2019, 2020, DeFi summer. I don't see any exciting applications being built. And maybe there are some things being built behind the scenes, but they certainly aren't presenting themselves to the market now. And you need to have those applications out in the wild. And if you early stage adopters realize this is a big deal, that's exactly what happened during DeFi summer. We were there in 2019, 2020, and we will be there for the next cycle, the next move. But we are not seeing it here in the market. I'm looking as hard as I can, guys. I'm definitely a long-term optimist here when it comes to the innovation around DeFi. I love DeFi as a narrative, but we're just not seeing the follow-through. Take a look at MATIC. Same exact chart here. And a large part about the monthly performance here. Huge move off of the XRP news. Fade here, only up 8% this month and looking like it's ready to roll over a lot of those gains by the close. Again, this just doesn't look optimistic here, right? This is a terrible candle pattern here following this 4-month decline here, right? So we're seeing just really poor performance here across the board on layer 1, layer 2 plays, the large cap plays in the crypto space that are either multiple billions, if not tens or hundreds of billions of dollars in weighted market cap. I'm not just here to bash on Bitcoin, but I'm not also here just to bash on Bitcoin and altcoins. If we step out of our micro perspective here in the crypto space, guys, it becomes abundantly clear here why what we're seeing here is going on. Taking a zoom out here into the altcoin space as a whole, we've faded down the vast majority of those gains. We've cut down over $30 billion of gains from that green candle we got back there on July 13th, right? From that absolute peak. And it looks like we're coming right back down to where we were before the news. Take a look at stablecoin liquidity. Right? Now, we would have expected, right? And I just want to, again, put it aside here because I know everyone thinks that XRP won the case. And a lot of people think that XRP won the case, not everyone, but a lot of people are so confident that the judge ruled XRP, the secondary sales are not security, and this just, again, protects all of the crypto industry. If this was such an optimistic piece of news, if this was the thing that really catalyzed the new bull market, as so many crypto advocates said, why is stablecoin liquidity still going down to new relative lows? Why is it still down in the same range it was at back in February? If there is a Bitcoin bank run, if there is BRICS and de-dollarization, everyone's just rushing to buy Bitcoin or altcoins and catch on the next crypto wave, if the XRP news and BlackRock are all just guaranteed, why is stablecoin liquidity down? The on-chain metrics do not lie, guys. We can see when these stablecoins increase or decrease. And I keep beating this like a dead horse because it is important to understand that you can't say liquidity is absolutely everything when the market's moving up, right? The Fed, set stablecoin liquidity, it's essential for new bull markets, but when the market is not seeing that liquidity, you can just ignore it. You can't do that. This is so imperative to whether or not we are getting a new bull market. And this is, again, a visual representation of on-chain metrics that the market makers like Jump and Jane, all these huge players that were huge market makers in the space, they're out. They're not coming back. Not until the right setup is in play here in the market where the real opportunity is there. And again, you just see that generally people are abstracting liquidity from the market. This allows for thin order books where some short-term moves can happen, but essentially speaking, you're not going to get the big traders coming in who are going to set in big bids on the order book and protect price and allow for those long-term moves and allow for the market order flow to take off. Now, some people would say that's because USDC, Nick, you're being biased by pulling up USDT and USDC. Well, take a look at just Tether here, right? We would expect off of that XRP news that, again, USDT, which is kind of an offshore stablecoin on-ramp into the space, that family funds, hedge funds should be piling in liquidity now. Well, just this past 2 months, we've had some of the slowest growth rate for USDT in history. $155 million last month, $429 million here in the month of July. That is a 0.5 and 0.19% increase respectively. Not 19%, not 50%, 0.5, 0.19%. So over the last, say, quarter here, right? I know it's not exactly the quarters, and we can even take it here from the move here in March where we got this kind of 12% expansion up here, right? Over the last 4 months, we've seen what? 4% increase in stablecoin liquidity. Let's compare that back to 2019. Just for, again, we'll just use Tether here. It's fine. Here in April of 2019, when we had the move in Bitcoin, we saw a 40% increase. A roughly 40% increase in that period of time, followed by another month that took us to a 56% increase, or 11.6% increase over month. Another 13% increase on month over month, which took us to 77% increase in stablecoin liquidity. And here, a full 100% move in 4 months after another positive 13% month of stablecoin liquidity. And look at what happened. After that stablecoin liquidity stopped increasing, we flatlined for a couple months. And you want to know what happened during that period of time? Bitcoin stagnated. Pushed sideways, started to actually go lower. People took those gains off the table, right? You need constant liquidity injections for prices to move higher. And there's a reason why this move in the market has been relatively lackluster, or pretty much about a third, right, of what we saw. Notice here how we had a 100% move versus the 32% move in liquidity. Notice how back then we saw roughly, I think it was around like a 300% move in Bitcoin's price versus the 100% move now. Math doesn't lie, folks. It has to do with liquidity. And this isn't just a story, as I mentioned earlier, so we're going to talk about, it's not just a story of crypto. It is a story of global liquidity, folks. Now, the NASDAQ here has been hunky-dory, really excited off of AI. The music is starting to stop. With ChatGPT's public website visits going down 200 million visits over the last month, with a flatline figure the month prior, showing no signs of growth, with a lot of studies coming out showcasing that ChatGPT is getting effectively dumber. Essentially, there's a lot more restrictions and guidelines and changes being made to the models that essentially are really counterproductive, and you have to think that it is almost being purposely sabotaged. This isn't how you roll out product upgrades. You don't not tell your community you're going through updates. You don't essentially push out something that hasn't been rigorously tested. That's how ChatGPT 3, 3.5, and 4 were released. Now there's these behind-the-scene changes that are going on that are really making these language learning models much less effective, let alone they were already being oversold. And now, equity valuations in the NASDAQ since back in October of 2022 are at a premium of 43%. Many of the technology stocks that have led this are up 100%, 200%, enormous amounts of percentage gains from that period of time. And yes, Great for people who caught that. The question is, are we really ready to continue a new bull market? Can the NASDAQ reclaim prior all-time highs and continue moving higher? Well, as we talked about the other day, the NASDAQ S&P ratio here has taken us back down. We've basically closed down 2 months of gains here for technology stocks versus the S&P 500. It was already flat for the majority of the time. So this is a signal here, right? When we see growth slowing, like we saw in August of 2022, when the Jackson Hole speech came from the Fed, where he put down the hammer and let people know that the Fed was going to continue tightening for a prolonged period of time, similar to here in February 2021, where the FANG stocks started to really weaken, and a lot of this pretty much was kind of the signaled kind of highs here for equities. Equities continue to move a little bit higher here, but really that was when the majority of the gains had really come in. And we also see here in November of 2021, when there was a substantial decline in the NASDAQ versus the S&P 500, technology stocks started to underperform and went down for a long, continuous decline. I'm going to wrap everything up here with 2 last things, guys. I'm not here to just bash AI. I'm not here to bash crypto. I'm not even here to really be negative, guys. I'm here to be realistic, because right now, something really big is happening. And while a lot of people have chosen to ignore it, we have been talking about it constantly here on this channel. It is the only thing at the end of the day that is going to matter when it comes to formulating a new bull market. Has to do with liquidity. And I know it's boring. I know people don't want to talk about the Fed 24/7. 25 basis points up or down in the Fed funds. What does that really matter, right? It sounds kind of boring. It's not as exciting as talking about a 50x altcoin or talking about the next latest, greatest AI stock. This 25 basis point, or now potentially, I mean, I don't think we're going to get it, but people are even starting to price in. They went from having a low probability of a 25 basis point increase to now talking about a potentially 50 basis point increase. Shows a major reversal, not only in the bond market, but in the Fed Watch tool, that essentially the Fed is going to have a higher target rate. And that is going to mean liquidity is going to contract, it is going to get more expensive, and people are going to require more money to pay down and finance debt. Student loan debt repayments came back online in the United States back a couple weeks to a month ago. Credit card debt is surging. And now the Fed is still going to continue raising interest rates. What does that tell you about what the Fed thinks about the economy right now? Whether or not inflation has been dealt with, that we're really ready for a new bull market. What does it tell you about how long the Fed sees that we're going to have high sustained interest rates? Much longer than most people previously thought. Much longer than what the Fed previously thought at the end of the day. We've been one of the few channels here, guys. And I say this quite proudly here because we don't get everything right. Yeah, we're not trading every single move. Yeah, we'll miss some things from time to time. But as someone who's focused on swinging longer term moves in the market, I got to say one thing we got right. Back more than a year ago, we said that target rate was going to be well beyond 5%, back when it was 2.5 to 3%. And practically no one believed this at the time. So many people disagreed with our opinion at that time. And now we're talking about going beyond 500 basis points or 5%. And it comes back here to this chart, global liquidity. I want you guys to take a good look at this chart here, and I want you to tell me if it looks like global central bank liquidity is moving higher. Because if it isn't, in the same way that we realized that the Fed, the ECB, the Bank of Japan, the Central Bank of China, the Bank of England, all the major global central banks, that when they injected liquidity, it benefits assets. We simply need to realize that the counter opposite deteriorates the valuation of assets. And if we aren't holding at this range at around roughly $25 trillion liquidity, $24.5 trillion liquidity, if that breaks, we're likely moving to the next level of 20 trillion. This is why I've continuously brought up not only global liquidity, with the United States Central Bank balance sheet. We got to get somewhere in this ballpark. We got to cut down on this secondary wave of stimulus, I think, to get that equilibrium of supply and demand. There's just too much money in the system still to this day. And that's not me being negative on altcoins or Bitcoin. It has to do with the fundamentals of the economy. And maybe we want to think that we're separate from that being crypto. Crypto doesn't care about it. You know, the old Bitcoin joke, Bitcoin doesn't care, or like Honey Badger don't care. Like, you know, anyways, some of you may remember that joke with Bitcoin. But yeah, Bitcoin's a big boy now. It's a big asset. And you can't think that it's going to forever be this kind of abstract asymmetric thing that doesn't have any ties to the real world. Liquidity has an effect on everything. And until we start to fairly realize that, we are following small short-term fallacies as to why Bitcoin should and can go up. So anyways, guys, I rambled a good amount here. I want to ask you two things here. One, if you made it this far, can you consider dropping a like on the video? It's a great way to support the channel. You guys have been so kind and supportive over the past couple years. And you know I'm going to be here during bull and bear markets. I'm always going to give you my honest take, whether it's the popular opinion or not. But the second thing is, I want to ask you guys, if you enjoy this kind of content here, if you like my rambling, perhaps you'll like it in written format, or you might even like some of our exclusive video content as well that we put out through the Dash Report. It's our newsletter here on the channel. I'll have a link down below in the description and get 20% off on an analyzed basis. It's one of the great ways you can really support the channel and what we do here, all the free content we put out, but also the exclusive content that we put out, whether it be the 20-page newsletter we put out every month where we cover crypto, stocks, commodities, and Forex markets, but also as well, you'll get access towards our mid-month webinar. You can ask me questions directly. We'll dive into the charts. You guys get access to our Dash Report discussion group, our alerts group, so you can not only speak with other different members within the Dash Report community, but also get my trade alerts when we make those big moves. And there are markets, I'm going to let you guys know now, there are markets that we're excited about, that we're looking to buy heavily on the next dip, or even right now, but they're not crypto. And that's the problem, is if you kind of pigeonhole yourself to one market that you're familiar with, you can really lose out on great opportunities, new market leaders. It tends to be that the assets that have done well over a couple year window or decade period of time, they're not going to be the market leaders of tomorrow. It's not going to be the FANG stocks that are already multi-trillion-dollar companies. It's likely not going to be crypto, which is going through a lot of its high growth period. It's going to be other markets. So if you want to figure out what kind of markets we're tapped into, we share that information first within the Dash Report community. So if that's something that interests you, you guys can definitely check it out here. And that being said, thank you all so much for giving me some time out of your day. Hope you all have a wonderful rest of your day, and I'll see you all in the next video. Take care, everyone.